Today I want to do a weekly review for the week ending November the 15th of 2019. We're going to look at a couple of things here, try to determine where we think the market's going and what we think we can expect going into especially next week. We're getting close to the holidays. We're going to have some slower volume in the market, a little bit less trading. Toward the end of the year, we'd expect to see some profit taking, especially with the market, looking at these all-time highs here. Right here, we're going to start with my Bollinger Band indicator. If you need to know how to set up my indicators, you can find all that in the description below, as well as a link to our website. It has a lot of other good free information. But let's start by taking a look at the ES. As you can tell, we had a breakout over the previous highs here. It's a good move up Friday, looking at, again, all-time highs. We're over the 1 ATR band, pushing into this 2 ATR band. It would continue to move up. Looking at the TTM squeeze indicator, it's showing a little bit of consolidation going on through here. As you look at these candles, as the Bollinger Bands start to contract, you're getting a little bit more moving into a range, even though you have this candle right here that's pushing up even further. It's real hard for me to say that I can bet on this market going higher. In other words, I wouldn't go long here. And my gut feeling says, it's got to pull back, off of this high. Yes, we've had bounces to a high, pull back, and then bounce to a high, and then a drop. And we haven't had that second test yet here. Here we moved up, which is kind of what we're seeing right here. Had a little bit of a pullback here, a little bit of consolidation here. We did have consolidation here, a very small amount of consolidation here, but we haven't had a pullback yet. So, if you're leaning toward the long side, I think you're going to have to say you need a pullback before you head up again. And, something like this, where it pulled back, went up, this, it pulled back and went up. Here it pulled back, tried to go up, and then collapsed down before it started rebuilding. I would not go long here. I would not tell you, next week, starting off the week, immediately to go long. With everything that's going on in the world and in the financial markets, I still really feel like there's got to be a pullback in here somewhere. And let's take a look at the next sub indicators and see if it shows us the same thing. This would be my wave indicator, and it's showing the same thing. See how far away we've pulled from the wave here? And this is a 2 ATR band, is on the Keltner channel right here. We really pulled away from the band. If you look at RSI, it is over 70. It has always pulled back or consolidated when it hit this level. This was just a super high level here, and I just don't see how it can continue to push up without some kind of relief, whether it's a consolidation or a pullback and a move back up. The big takeaway, as I've already stated, is I can't see going long from this level. That doesn't mean it won't continue up next week. It just means this would be a very high risk place to go long. If I were betting, or if I had to take a trade, I would much rather buy a put or something right here. Now I wouldn't, because this market has really fooled me a bunch of times this year when I expected a pullback and didn't get it. What I would do is wait to see what the candles next week look like and then make a decision. If I get some sort of move like this, where it's a low range candle, that kind of indecision candle, or this isn't a very good candle, but it looks like it's going to make a move down, then that's when I would want to go short. A big candle like this moving short, I would almost be tempted to go long if I saw this up here, which I would have to stop in this area. So I would have lost a little money here, but it's just this market has been very frustrating for me this year, as it's continued higher many times for no reason. So I don't deny I've struggled a little bit in trading this year, as far as trading market direction. For probability-based trades, it worked out really well. Let's take a look at the third indicator I use, and these are my moving averages, my EMAs. You can see, and you probably saw it on some of the other charts, you saw these trend lines. These are weekly trend lines. The solid one is a daily trend line, which we did temporarily break the daily trend line here, but because of how steep it was, that really doesn't mean a great deal. that's not a huge break. It's just way too steep of a trend. What we saw here on this weekly trend line, which was extended from a previous line on the channel, is it bounced here, it bounced around here, it broke it here, and then it used it as support before it headed back up again. So I would expect this trend line to continue to be support. If you're looking for probability-based trades, you really have no resistance above other than 52-week highs as it hits those. So you really don't have a lot to use as resistance, if you're doing probability based, other than looking at your deltas and trying to keep a 10 or 20 delta on your options. But my expectation would be for it to pull back into this area, because you've got this trend line here. You've also got all the moving averages moving up to provide support. I did a probability-based trade on the ES this week, and my short was down. I think it was down right in this area. So, just looking strictly at this chart, on my support on the downside, I had this EMA, this EMA, this EMA. This is the 50-day simple. This is the 200 simple. I had this trend line, and this pivot low all as support. Now, we all know that market events can blow through all these support lines like it did right here. It just blew right through all of them until it hit the 200, until it hit this trend line, which actually this trend line was formed on this candle and this candle. So this trend line wasn't here then. But you did have these other lines, and it did find support at the 200. And even here, although it broke the 200, it did pop back above it. So this was just a very temporary break, and you can see it right here, this V bottom type trade, where it reversed and was headed back up off that 200. So the 200's provided good support and resistance, even going back into this area, where you're getting support and resistance. So, having a short position down here, I feel fairly comfortable about, unless something major were to happen in the market. If you're looking at probability-based trades, like an Iron Condor or Strangle, I would look at the deltas for your top side short, and I would look down in this area right here for your put short. That gives you a lot of support, including the 200-day. But next week, my best guess is we'll see a pullback or consolidation. It's difficult to believe it would continue to push higher next week. That being said, and I've been wrong numerous times before this year, so I would not go long here, even though I do believe it's going to consolidate or pull back, and I think the greater probability is a pullback into here. But I'm not confident enough in it to tell you that you should go ahead and place a trade based on Friday's candle. We're going to have to wait and see what Monday and Tuesday hold to make a decision from there. But I would certainly be leaning toward a short back into this area, right through here. Yes, these EMAs are going to be moving up and providing some support, but that would be what I would look at, next week. So I really don't have a good trade for you other than do not go long here. You've got to get a pullback if you want to go long. My personal preference would be consolidation or a short, and that's the reason last week I placed a probability trade. I actually did a strangle last week on the ES based strictly on probabilities and support and resistance. We'll take a look at bonds also, see if we can get an idea of what's going on with bonds. I flipped back to the Bollinger Band indicator here. And what you're seeing is you got to jump up right into the mean of the Bollinger Bands. Right here, you could still go either short or long, but all this is policy based. So you got to be careful what kind of announcements you get from the Fed. But as I look at these two calendars, these two candles, this gap up, look back in history, got support here. I'm right between these two trend lines for support and resistance. I'm very tempted to go with a put here. I bet for more downside. I don't believe we're going to get below this though. So if you do go short, you need to be looking to take as a profit in this area. This right here is going to be a hard area to break this down. You got this trend line coming up. I certainly wouldn't count on breaking those, especially because right now that's a 2 ATR move, 1 ATR move. It's going to be difficult to break through those. Ideally, I would rather go short from here because I do see this trend is moving down now, and which is pretty obvious on the chart. But this is an area you could go short if you wanted to. I would certainly rather go short here than go long. Let's see if the other indicators confirm. Okay, this is the wave indicator. You see you've got the trend, is moving down. You had an uptrend, pulled back a little, the trend went back up, and now it's headed back down. You got kind of a consolidation here, or a move back into the wave. But based on where this is trading, this still looks like a short to me. Now, unfortunately, if you do go short, your stop's going to have to be either here or here. And because there's not much difference, I would probably put it here. If you get a gap down Monday, then I would probably stay out of this trade, because I do expect it to find a lot of support right through here. So, if it trades in this level Monday, or if it trades slightly higher Monday, I would be looking at a short here. Let's take a look at the final indicator, and these are EMA indicators. And again, this yellow line and this green and this blue line are areas where you'd be looking to short in a downtrend, and we're right there. We're right in that area where it's telling me I should go short. In fact, I've got a long TLT trade that has, I think, a January expiration that I may close Monday because of these patterns I'm looking at right here. I certainly would be nervous about going long. I would rather be short if I was going to make a trade, but your profit area is probably right through here, at least for a partial profit. You might keep a runner on to see, if it gets a bounce and continues down. But getting below this level right through here is going to be very difficult. So I expect a lot of support through here as we move to that area. Unless, again, the Fed comes out with some sort of announcement, which is always possible. Finally, today I want to look at the yen and see what kind of signals it's giving me. And as opposed to the ES, which makes me very nervous about moving up any further going long, the yen actually is starting, I think, really show me a long entry here. We've got a weekly trend line here, which was actually, it was broken by the wick here, but a slight break, as long as it recovers, I really don't pay attention to that a lot. It got broke by the wick. Actually, it got broke by the candle here as it closed, but then it bounced right back above it. So, as I look at this, I think there's a lot higher probability that it's going to continue up. So that kind of affects some of the other trades. And I also got to take that into consideration. I'm looking at the ES saying that I expect a pullback, but I'm looking at the yen and say, well, I'm thinking it's going to go back up further. If I were going to go long, is from the ES to the yen, I think I'd rather take the yen long through here, because we're still in this main area of the Bollinger Bands. We've got very narrow bands here, so we're expecting some sort of breakout, some sort of increase in the length between the Bollinger Bands. I think it's much more likely, looking at this, that it's going to break to the upside. The TTM squeeze indicator shows you that also, as we've got some consolidation patterns showing here. But I do think that looking at the trend line, this is a little bit of a steep trend line, but it's certainly a tradable one. You've got resistance here on this trend line you got to be careful with, and you've got this top here you got to be careful with. So your profit target is getting very narrow here unless it breaks out. But this indicator does indicate that it is wanting to break out, and I think there's a much higher probability that it's going to break to the upside as opposed to the downside. Take a look at the other indicators, see if we get the same type of agreement. And as you can see, we do. We're getting a bounce into the wave. It comes up out of the wave, bounce into the wave, comes up out of the wave. I am noticing that it's moving horizontally here, which is a little concerning because I don't want it to turn down. If it turns down, though, what we could have is just a pullback before a move back up, which is fine. The problem, except for the fact that you don't want to buy here if this is turning down, you want to buy right here in expectation for the other trend to pick up, because this is an uptrend. I don't think at this point that it is a continuation. I pull back on this downtrend here. You have a downtrend, consolidation, downtrend, consolidation, downtrend. I think this is a reversal where it's going to start an uptrend. But you do have a lot of resistance points that you got to be very careful with as you take profits. RSI is right in the middle, so it really doesn't tell us anything. Let's take a look at our final indicator. Again, we're right in the buy zone. This is our wave, this is our EMA indicators, and we're still right in the buy zone right here. maybe you look for Monday or Sunday night and Monday you look for some sort of consolidation and then you take it long. I would say that if I get a consolidating pattern Monday, because right now it's Sunday morning and I can't place any trades because I don't trade the Forex directly typically. Normally I trade options. But if I were looking, for something to do Monday and I see some sort of inside range bar or a bar that closes right around this area, I would be very tempted to take a long trade with a stop probably about either right here or right here. And I'd have to just kind of look at price action to determine my best place for a stop. Because you've got two support lines here if you take it here. If you take your stop down to here, you've got this pivot low, plus you've got your support here. So I hope those were helpful to you. If you like the channel, please like this video. Please subscribe to the channel. Please let me know if you have any questions. Let me look at some other things. We're trying to put a lot of free education out there. That's my goal, to get as much free education out there as I can to you and to give you my best guess as to what I think is going on based on my indicators. Now you do have one thing I failed to mention, you do have a 200 simple moving average right here that's providing a lot of resistance. So if you do go long, you've got resistance here, and you got to really watch this. Is it going to continue to break above the 200 and stay above it, or is this really eventually going to turn back down? I think by the end of the year it is going to turn back down. But right now, for at least a week or two, there is some potential to the upside. So I wouldn't hold on to this too long if you do decide to go long, and unless you see a good breakthrough of these levels. But anyway, if you have any questions or comments, let me know. And thanks for watching.